Hello traders, good morning, good afternoon, good evening, bonjour, bonsoir, mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TS RSI Pro Traders. The title of this video is how to avoid the RSI indicator mistakes, alright? If one is using the MACD indicator, one must learn to master MACD indicator, all right? When one is using the slow stochastic, one must learn to master the slow stochastic indicator. When one is using the Bollinger Band, one must learn to master the Bollinger Band indicator. And if one is using the RSI indicator, the relative strength index indicator, one must learn to master the indicator. How one can master, a technical indicator. In order to master any technical indicator, one should be able to understand the technical indicator. So do not use any technical indicator if you do not master it. Otherwise, you are likely to make a lot of mistakes. In this video, I'm going to show you how one can avoid, the RSI indicator mistakes, because I learned to master the relative strength index indicator. Let's get started. For day trading, for swing trading purposes, for investment trading decision, I'm going to show you right here, right now, how you can also master the RSI indicator. At the end of this video, one will be able to understand, the RSI indicator, and most importantly, to filter out false signal and be able to avoid the RSI indicator's mistakes. All right, let's get started. All right. So there are few things I want to clarify with traders first. When we are using any indicator, we want to know what type of indicator we are using. So for instance, as I explained to traders at George Trio YouTube channel, I explained to traders that MACD is a trending technical indicator. It allows us to detect, the beginning and the end of a trend. We want to know whether a financial asset or security is trending. Therefore, we can use MACD, we can use moving averages, we can use a trend line, we can use channels. These are the tools that we use when we want to, we are trading during a trending phase. All right? But when we are using the RSI indicator is not a trending technical indicator. So it's an oscillator that is, helping market participants to detect overbought and oversold market condition. So for each trending indicator, for each technical indicator, all right, we want to apply what we call the market pattern. The RSI indicator performs very, very well when the market is balanced. So we have a consolidation time. The price is oscillating between two levels. So this is what we call a balanced market. During the balanced market, the volatility is low and the price is confined between two levels, one support level and one resistance level. So the RSI indicator will perform very, very well if there is a low volatility and the price confined between two levels, one support level and one resistance level. This is the time where we can use, the RSI indicator. Another way to detect that we are in a balanced market, you will see that either the moving averages or the MACD indicator will be horizontal. So they are not rising and they are not declining. They are going horizontal. You will see that many moving averages will come together. So you will see them, moving averages will come together in one place, moving average 20, 50, 30, 100, they all come in one place. You know that the market is consolidating because the volatility is low. If the volatility is high, you will see that there will be divergence between the moving average. There will be a big space between, the moving averages, all right? This is how we know that the market is trending up. When the market is trending up, also we'll know that the price will display higher lows and higher highs. Okay. When the market is trending down, we will see lower lows and lower high. But when the market is consolidating, the price will be confined between a two level, one resistance level and one support level. I want to show you something here because I want you to master. After this video, you should be able to trade the RSI indicator on any time frame. Any time frame. All right. So you can see here what the price is doing. We have what we call a balanced market pattern because the price is in between two key levels, one resistance level and one support level. The resistance level is colored in red, and the support level is colored in green. You can see here. So we need to see up, down, here. Now we know that the consolidation has begun. But at this point in time, we do not know. Here we know now that it's consolidated. So you see from here, it went up here, come back down to this support level. So, and now we need 3 points. 1, 2, 3. Here. Are you with me? 1, 2, 3. With these 3 points, we can draw these lines. So these 2 points, we have this gray line, and this point here, we draw a line that is parallel. So we know now that the price is consolidated. Now here it is, here. So the RSI will perform very well when the price is oscillating between the two horizontal lines. This is, in fact, the market pattern for swing trading. The definition of swing trading is, in fact, the price going from A to B. The price swinging between A to B, up, down, up, down. This is about the swing trading. But when we are talking about swing trading, the price is not always consolidating. Sometimes it's trending. But then if we are the price trending, which tool should we use? We should use MACD, we should use moving averages, we should use trend line, we should use channels, rising channel, declining channel. But here we are. So at this point in time, you see here, the price consolidating. Here now we know. So with this 1, 2, 3, now we draw the line. Here it is. Okay. So at this point in time, I will draw a line. How do we avoid the RSI mistakes? As soon as we see the price consolidating, we draw the resistance and the support level. So the price at a resistance level, normally the RSI should be also overbought. But here we are, you can see that the RSI is going down, going down while the price going up. And the price hit a resistance level. This is a bearish divergence. The indicator is going down, the price consolidating, and the indicator is going down. We will look for opportunity to sell right here. A TST WSY S008 trader will go to the signal time frame and then use the TST key 02 to enter the trade at this point in time. So all I will do at this point in time is to draw this horizontal line here. Then I will go to the signal time frame. Wait for signal, and then I will use the TST key 02. How do we know that the price is going to go down at this point in time? So we draw the line, and we can draw a common set trend line here. So after this candle is closed here, it's a bearish setup. Now we apply the trading drill, and we will sell. It's beautiful, isn't it? Beautiful. Now the price at the support level, you can see that the RSI is not yet in oversold zone, because the oversold zone for the RSI is at 30. The RSI indicator, I'm using here the RSI period 14. This is the default setting for the RSI on most trading software. So here it was not oversold, but because we are not trading the indicator, we are trading the price, we know that the market pattern is horizontal. So here, though the RSI was not oversold, we are not trading the RSI, we are trading the price. All I will do at this point in time, again, right here, attention please. Though the RSI was not oversold, we are not trading the RSI, the price oversold because it's consolidating right here. I'll put my line here, the green line, and I will use again a top-down trading method. The setup, this is a setup. I'm on a monthly chart. As the TST WSY is usual a trader, I'll go to my signal time frame and wait for a signal, and use the TSTW key 02 to enter the trade. Again, right here, how do we know that it's going to go up? The common sense trend line of this side should be kaput, should be taken out. It went up. This is on the monthly chart. So for 2 months, you see it went up beautifully. We can apply this strategy on a daily chart, on the hourly chart, on the monthly chart, on any time frame. 2-hour chart, I prefer the 2 hours compared to the hourly chart, okay? I prefer also the 2 days chart compared to the daily chart. Though we can use the daily chart, because we see too many distortion on the daily chart, we can use 2 days chart, we can use 3 days chart, we can use weekly chart, okay, and then switch to the first best, to the signal time frame or the TSTW/08 if we are swing trading. A TSTW24 trader at this point in time will also monitor the activity of the price. As soon as this trend line is broken, we go to the first best time frame and draw our trend line channels, okay, and draw the support and resistance level, and we want to buy at the support level on the edge of this green line here. All right, so you see here, so the RSI was going down, the price at the resistance level. We are not trading the indicator, we are trading the price. The market pattern for the RSI is the horizontal market pattern. So if the price consolidating and the RSI is going down, if the price hit the resistance level, this is a bearish setup, provided that the common set trend line is broken. On the other hand, if the price is consolidating and the price hit the lower part of the channel and the RSI is going down, if the common set trend line here is broken, this is a bullish setup. All right? So here finally you can see that the RSI is now in the oversold zone. Here it was not, now it's oversold. This is the normal way to use the RSI, because now this is a truly oversold. It is oversold. Why? The RSI is oversold doesn't mean that the price is also oversold. But in this case, though the RSI is oversold, the price is also oversold. Because why the price is also oversold? Because we have a balanced market. If the RSI was oversold, but the price is not consolidating, it does not mean that the price is also oversold. So the only time when the price is oversold at the same time with the RSI is when the price is oscillating between 2 levels. The RSI is oversold here, the price is consolidating, therefore the price is also oversold. Here, the RSI is overbought above 70 level. All right, the price is also on the upper side, not exactly, but close to that zone. What do we need to wait for? We draw a line, as I did, and we wait for the common central line here is kaput. You can see, in fact, it did below the trend line, the red candle here. This candle went below the trend line, and this one retested. Beautiful. Break below on the monthly chart, and retest it here. You see here? So if you are using the TSTW/08, you break below. If you went to the signal time frame, you'll see that no, there is no signal to sell. In fact, signal to buy, because what is happening? Dip below and retest. Price dip below a bullish trend line. The price want to confirm that trend line as a resistance level. Now it retest it. Break below, retest. The setup is not already here. Okay, if it did below it at least, and we did not receive a sell signal, we cannot sell. So here it did below. This candle, we wait for it on the monthly chart, is closed. If you're on the hourly chart, you wait for the hourly candle to close. If you're on the 4-hour chart, you wait for the hourly, the 4-hour candle to close, and then you switch to your signal time frame. If there is no signal, all right, there's a high chance that the price may try to retest the trend line. Here it did retest it, which means the price went back up. As soon as it retests it, this is the language of the price, break below, retest it. Now we can so as soon as it break below and retest like this, all I will do, I'll draw down another line like this. And now I'll go back to my signal time frame. And here we have a signal to sell. And we went down for 2 months before coming back up again. What I say to TSTW as usual, traders, if the signal fell, just come out. Because you see, it went down first, and then it went back up again before coming down. So you want to flow with the signal. If the signal change, just come out. Don't force it. All right? So the RSI, when we are talking about the RSI is oversold, at 30, buy, is only true if the price is also consolidating. When we see that when the RSI is overbought, the financial instrument is also overbought, this is only true if we have an horizontal market pattern. But at dayprotrader.com, click on RSI trading. If the RSI is overbought, what do we need to do? We draw a warning line, an horizontal line. Draw it. Just draw it. RSI is overbought, draw the line. Now wait for a signal. If the RSI is overbought and the price break above that horizontal line, your warning line, is no more bearish. If the RSI is oversold and you draw your warning line and the price D below that warning line, is no more oversold. Let's move on. So I finish with the normal way that traders use the RSI, because we see a lot of distortions in this market when there are traders are using some crazy trading software. RSI is overbought, sell, RSI oversold, buy. It's not always true. This is only true when the price is also consolidating. So to avoid the RSI mistakes, one must trade the RSI with the three market pattern: the rising channel, the declining channel, and the horizontal channel. The best market pattern for the RSI indicator is the horizontal market pattern or the consolidation phase. All right, so let's move on now. I want to show you another scenario when the price is trending up. How do we handle that? So there is a time when the RSI will become overbought, but we can buy. And there is another time when the RSI is oversold, when we can buy, when we can sell instead. So there is a time when the RSI is overbought, we can buy, beautifully buy, okay? When everybody else is selling, we can buy. There is another time when the RSI is oversold, we can sell, okay? So though the RSI is oversold, the price is not oversold. We are not trading the RSI. If you were trading the RSI, you will buy. But because the RSI is oversold, but the price is not oversold, we cannot sell. I mean, we cannot buy. We cannot buy because the RSI is oversold, but the price is not oversold. We cannot buy. All right? Remember that we cannot buy if the price is not oversold. Though the RSI is oversold, we cannot buy. We are not trading the RSI indicator. This is the message that I communicate with traders all the time. We are not trading indicators. The indicators are giving us warning, okay? Or any time frame. So look here. All right, I want to show you now, because at the end of this video, you should be able to trade the RSI on any time frame. Put your comment below. Test it first on a demo account, okay? See how it goes. And if you don't understand anything, watch the video again and practice until you master the RSI once and for all. You should be able at the end of this video, okay, to trade the RSI, okay, like okay, God. All right, when I say God, I mean like somebody who truly understand the indicator. Okay, so here we are. You see here in this session, the RSI is above 70. The line here is 70. I'll color it now in red. So when the RSI indicator is above 70, it is considered as overbought. But the RSI overbought does not mean that the asset also is overbought. It's only true if you have what? A balanced market. You should understand that once and for all. All right, I'm repeating myself so you don't forget. Okay, so here we see that the RSI is overbought. You can see that it became overbought for the first time here, right here. So how do we handle it? So it became overbought for the first time. Okay, I will draw a warning line there. This is my warning line. So all I say to the RSI, I say thank you for the information given to me. I acknowledge that you are saying that the price is also overbought. Then I will draw my warning line. If the price is truly overbought at this point in time, it will not break above this red line and find a support above it. But if the price break above the red line and find a support, well, I will buy. Though the RSI is overbought. You can see here the RSI was overbought, but what has happened? The price is in a rising channel. So if you are selling during this time, while you are doing, you are trying to distort the market, and the professional will punish you. Okay, the smart money will punish you. Okay, this is not good. Okay, see here, it's overbought, yes or no? Okay, I will show you with a two vertical line at the point. Now it become overbought here. Okay, pay attention. And up to this point, it was overbought. But look at the price itself, the number one indicator that we are trading. We are not trading the RSI. We are not trading the RSI. We are not trading the RSI. Okay? All right. The reason why I'm doing this is because I know that traders make this mistake all the time. We are not trading the RSI. Okay? We are not. We are trading the price. Okay? So you see now in this session where the RSI was above 70, but the price was going up. We can buy. We can buy confidently like a smart money. Okay? You can buy. Why we can buy? Because we draw first. It become overbought here. So we draw our warning line. But it didn't find a resistance. In fact, it went above it, but come back down a bit and close back above it. So it D below it. So it's here. Alright? And then went back above it. Alright? We on a monthly chart. We can draw. At this point in time, you can, for day traders, you can draw a very nice common trend line along the candle. Okay, so you see two candle like this. You see this candle? From the edge of this one and this one, I can draw this common trend line, and I can switch to 15-minute chart, 30-minute chart, hourly chart for day trading purposes. All right? So you can see my warning line, the price went back above it. So you can see these are traders that I was selling. So here I draw my warning line. As a TSCWSY is usual a trader, all I will do at this point, I have my line, and I will say priority to sell signal below the red line and priority to bullish signal above the red line. Why? Because when the RSI is overbought, the bullish momentum is increasing. In fact, unless the price is consolidating. So when the RSI hit the 70 level, the bullish momentum is very strong. The magnitude of recent gains are higher than the magnitude of recent losses. So the bullish momentum is strong. If the price is not consolidating and the RSI is above 17, it means that the bullish momentum is very, very strong. So in that case, I will wait for the price to give me a higher low, or to break above a resistance level and to convert that resistance level as a support level. So as a TSCWSY as usual a trader for day trading, for swing trading purposes, draw my warning line as a priority to sell signal. So I'll go to my signal time frame, but I will only take sell signal below the red line. If I don't see any rest in sell signal below the red line, I will not take it. I will not. And if the signal fell, I will just come out. And you will see here it went down fast, and then it went back above it. And finally, you can see it will start going up. So after, you can see here, there was a resistance here. You see? Hit it here, come back down, touch it again, come back down. But now you want it. This is the breakout candle here. After this candle here, we know that it's going up. It's going up. So there was a small consolidation. In fact, it's a kind of triangle here. Remember the triangle, how we do it? Okay. There was this triangle here. Then we project it to the upside like this. First target. Alright? Okay? So we can buy even if the RSI is overbought, and we will not just buy because this resistance kaput. We use a top-down trading method. The setup, the signal, and a low-risk entry point. If you are using a TSCW24, we see it like this. We draw the warning line. It goes above it. We go to the first best time frame, but we want to buy above the resistance level or above the warning line. So we can buy here. I'm going to pause the video for a second because I need to do something here. So my apologies, I will come back to it very shortly, okay? Let's pause the video. I'll come back to you in a minute. Okay, traders, let's continue. Thank you. Now we're going to look at the second scenario. when the RSI is oversold. All right, so here we can see that it was overbought, and we can buy. Okay, so we can just draw. Okay, you can see the price in the rising channel. All right, the price in the rising channel, and the RSI is overbought. We can buy. Okay, the price trending up. It's not consolidating. You see that the market pattern here has changed. We can buy, but we will not just buy anyhow. We'll use the trading drill, the setup, the signal, and the low risk entry point. You see, you can buy along this trend line here. Okay, so pay attention to the market pattern. By using the market pattern, one can avoid many RSI mistakes. All right. So if you do not see an horizontal market pattern and the RSI is overbought and oversold, be cautious. Okay. All right. So here we are again. Here the RSI is overbought. You see it reached the level of 30 for the first time. I'm using the RSI period 14. All right. And at this point in time, as soon as I see like this, I draw my vertical line at the point when it's about to cross the level of 30. All right. So once I see that, I will draw also a warning line. So I'm going to remove my previous red line. This is my first warning line is this one here. So I'm going to remove it. And as soon as I see here, I will also draw, okay, you see the vertical line here. I will also draw it on the price to locate the candlestick bar. So once this monthly candle, where I draw my vertical line here, is closed, I'll draw my warning line. I cannot, if I'm on the hourly chart, I'll wait for the hourly candle to close at this point in time. If I'm on the 2-hour chart, 4-hour chart, I'll wait for that candle to close, then I will draw my warning line. Okay, it makes sense? If you want to know more, go to www.dayprotrader.com or subscribe to Day Pro Traders YouTube channel. Okay. So here, so I'm going to remove this line again. Okay, so we can focus on the oversold zone where the RSI is about to go below the level of 30 right here. So I have my line there, then I will draw my warning line. Why do we need to draw a warning line? So because very often we know that the RSI is oversold, some traders want to buy. Some traders, some crazy algorithm or software will try to buy. Okay, so we draw our warning line. So at this point in time, I will say to myself, priority to sell signal below the red line. And I also use my the trading drill. Wait for the signal on the signal time frame, and then use the TSTW key 02 if I want to swing trade. As a day trader, I will use the TSTW 24 here. So I will go to the first best time frame and then watch this red line. I want to sell. I want to sell at a resistance level. Okay, right here you can see, though the RSI you see now is oversold, the price was going down. As you again, all right, you can see straight away that we do not have an horizontal market pattern. So if you do not see an horizontal market pattern and the RSI is oversold, be very, very cautious. All right, right here, we can sell beautifully on the edge. All right, because we are not trading the RSI, we are trading the price. The RSI becomes oversold. We acknowledge the warning that the RSI is giving us by drawing a warning line. But then we will focus on the price itself and pay attention to the market pattern. All right. If the price dip below our warning line and the final resistance right there, so we are the monthly chart, we can switch to the daily chart at this point in time and see whether the price will pull back, rally up to retest the red line. If it did that, then we'll switch to our signal time frame and wait for a signal. We can apply this strategy on the hourly chart, 2-hour chart, 3-day chart, but the most important thing traders should remember is to apply a top-down trading method. A setup, this is a setup, this is not the signal. Then we go to the signal time frame, wait for the signal, and then go to the low risk entry point. If the signal fell, Don't fight it. Just come out. Just come out. All right. Just be obedient to the price. Just come out and wait again. All right. Wait gently. But you want to give priority to bearish signal below the red line. Okay. On the edge. It makes sense. It is also powerful. So the market pattern, the rising channel, the declining channel, the horizontal market pattern will allow us to avoid the RSI mistake. The best market pattern for the RSI indicator is the horizontal market pattern. We can sell when the RSI becomes overbought, when the price is consolidating, or if the RSI is declining, or we can buy when the RSI reaches the lower part of the consolidation phase, and the RSI, when the price reaches the lower part of the horizontal market pattern, okay, we can buy, okay, because the market is consolidating. All right, you can see here the RSI was not oversold, did not reach the 30 level, but the price was at the lower part of the horizontal channel. But if you have an horizontal market pattern, and here, as you can see, the RSI is oversold, it means that the asset itself is also oversold. But we will not just jump on it on this monthly chart time frame and start buying. The common center is broken. This is the setup. Now we use a top-down trading method to enter the trade. Once again, I need to say this 100 times for traders. You will not use the technical analysis alone. You will now, once you see, suppose you want to swing trade or invest, even buy and hold, you will go to Google Finance, perform the Google Asset test, check the financial, the cash flow, the balance sheet, okay? And so you may know, you may compare, you may see whether the fundamentals are solid to allow a bullish progression, or whether the fundamentals are deteriorating to allow a bearish progression. Do not use, okay, the technical alone. At least pay attention to the economy news and okay, and also to the market environment. This is about the trading triangle: the market first, the sector before the individual financial instrument. Okay, you can download our free swing trading course at stochasticmarket.com. Click on swing trade at stochasticmarket.com, and then you will see a course, free course, and you can download it for free if you want to swing trade like a professional trader. Okay, you can also go to stochasticmarket.com, click on day trading, and download a day trading course for free. All right. So you can see here, though the RSI was oversold, it doesn't mean we should buy. We should sell. Okay, we should sell because why? The market pattern is not horizontal. The next thing I want to share with traders, because I want you to master the RSI indicator, the level of 50. So we talk about the level of 70, which is the overbought zone, the level of 30, which is the oversold zone, the level of 50, which is the middle line between the okay, these two lines. Okay, the level of 50. The level of 50 corresponds to the moving average 50. All right, I will not dwell on it. I will send traders to okay dayprotrader.com. Click on RSI trading to know more. All right, or check our videos. Okay, at dayprotrader.com about RSI reloaded. Okay, it makes sense. Okay, you can see here. Okay, are you with me? Okay, you can see that the RSI D below the zero here, the level of 50. I'm talking about zero because I use MACD all the time. I'm talking about zero. Can you see the RSI D below the level of 50 here? It's telling me that the price should also D below the level of 50, but it did not. All right, when we see that, this is what we call a discrepancy. See, the RSI D below the zero, but the price did not D below the zero. We are trading what? We are not trading the RSI. If the RSI D below the level of 50, but the price stays above the 50, it's bullish. All right? I don't want the video to be too long, so I'll go over this one very fast. Okay? See, if the RSI D below the level of 50, and the price stays above the level of above the moving average 50, it's bullish. All right? You see here, this is divergence. RSI D below zero, below 50. But the price stay above the level, the moving average 50. It's bullish. It's a bullish setup. Trend line is broken. We buy. We buy. All right. Okay. All right. We buy. We are not trading the price. What are we trading? We are trading. Okay, we are not trading. I think I'm getting tired a bit. Okay, we are not trading the indicator. We are trading the price. We will trade the price. Okay, all right. Okay. Here, if I move my vertical line here, the RSI D below the level of 50. Correct. See here, from the top, it D below the level of 50. It's telling me that the price should also be below the moving average 50. Right here, you can see that the price went below the moving average 50. The level of 50 of the RSI is almost equal to the moving average 50. I explained to traders all technical indicator, stochastic, MACD, all right, RSI can be substituted by the moving averages. They are powerful tools. All right. So here you see the price went below like the RSI, and the RSI became oversold. But if the RSI is oversold, we want to check the market patterns. Is it consolidating? Is it declining? Is it rising? We want to check the market pattern. Okay. So the level of 50 for the RSI represent the moving average 50. Here you can see that the RSI was above the level of 50 in this session here. Are you following me? Okay, because I don't want the video to be too long. In this session, you can see that the RSI stay above the level of 50. I will color the level of 50 into pink to place the beautiful ladies. All right. That's the level of 50. So you say it went above it, okay? Stay above it. It means that the price should stay above the moving average 50. Can you see there? Right there. Okay, it makes sense? Alright, moving also is here. The price was above 50. The RSI was above the level of 50. Okay? You can see in this session here, the price came back, or it didn't touch it. So the RSI came to 50, but the price did not. This is again what we call a discrepancy. It's bullish. The RSI went down all the way to 50 and started changing direction, but the price didn't come near 50. Sometimes the RSI may touch the level of 50. The price may not touch it straight away, but it is indicating to us that the price in a short-term time will come back to 50. Maybe you didn't understand that. Okay, let me say it again. You see here the RSI touched the level of 50. Okay, it's telling us that okay, the price should be at 50. Okay, but it's not. But what this is also telling us is telling me that very soon there is a high chance that the price will come to 50. It makes sense? All right. Okay. If you do not understand it, you have to replay the video. So here you can see that the RSI touched the level of 50, but the price did not touch the movement at 50. But what this is also telling me is bullish at this point in time. That's why the price went back up. Okay? But this is also telling me that there is a high chance that very soon the price may return to 50, which it did here. You see here? It returned to 50. Because the RSI here has given us a warning. This is a leading indication here. This is a leading signal here. So because it touched 50, but the price found support away from 50 is bullish. We will buy. Okay? But also, we have to be careful that very soon there is a high chance, not certainty, there is a high chance that the price will return to 50, which it did now here. You see now? Right here. Okay? So if you want to know more about the RSI, go to dayprotrader.com or subscribe to Day Pro Trader YouTube channel. Finally, you can see that the price returned to 50. At the same time, the RSI also is crossing 50. When the RSI is crossing 50, theoretically speaking, the price should also cross 50 if both the price and the RSI are in harmony. See here? Crossing 50, crossing 50. Okay? The oversold zone for the RSI, the level of 30, can also be substituted by the lower bound of the Bollinger Band 50 volatility too. Did you get it? The level of the oversold for the RSI can be substituted with the lower bound of the Bollinger Band 50 volatility too. The TSCW24 traders use the Bollinger Band 50 volatility too. So we do not need the RSI indicator. So if I put here on this chart the Bollinger Band 50 volatility too, okay, maybe I'll do it now. Okay, let's put another indicator, Bollinger Band volatility too, Bollinger Band. Okay, here it is coming. I have my Bollinger Band, and I'm going to change the Bollinger Band 20 volatility too. I will change it to Bollinger Band 50 volatility too. Okay, and you will see that when the RSI is also oversold, you see here it's oversold. Oops. All right, I moved my line a bit. It's oversold. The price will also be touching the lower bound of the Bollinger Band 50. And if the RSI is overbought, very often you'll see that the price will also be touching the upper bound of the Bollinger Band 50. That's why we use the Bollinger Band 50 volatility too, and we do not care about the RSI indicator, but we understand what is taking place. It makes sense? It makes sense? It is also powerful. There are more we can say about the RSI, but I want to concentrate on the mistake that traders are making when the RSI is overbought and also oversold. This video is about how to avoid the RSI mistakes, and the common mistake that traders are making when they are using the RSI indicator is that they will sell any time that the RSI is overbought, and they will buy any time that the RSI is oversold. But that's not the case. The only time that we can buy when the RSI is oversold is when the price is consolidating. And the only time that we can sell when the RSI is overbought is when the price is consolidating. Apart from that, we can perfectly buy if the RSI is overbought, but the price is in a rising trend line, in its rising channel. We can perfectly sell also when the RSI is oversold, but the price is in a declining channel. But remember what I show you now, we will always draw the warning line. Once the RSI reaches the overbought zone, as I showed you at the beginning, we draw our warning line. Once it touches the level of 30, we draw our warning line. This will allow us to use a top-down trading method, the setup. Okay, do not enter the trade on the daily chart, on the monthly chart. It's crazy. Don't do it. Okay, they will take you out before you see what's going to happen. All right, TSCW24 trader, setup, first best time frame, signal frame, just stay away from it. All right, you want to flow with the price. Okay, flow with it. Don't fight it. Okay, TSCW08, setup, signal, entry time frame for swing trading purposes. Do not enter the trade as soon as you see the RSI overbought. Okay, use a top-down trading method. Apart from what we call the trading drill, okay, we also talk about the trading triangle. Check the video on YouTube about the trading triangle at goo.gl channel. I hope you have learned something from this video about how to avoid the RSI indicator mistake, and will make a better trading decision when you are using this indicator, this momentum indicator, okay, for day trading or for swing trading. Until the next time, enjoy yourself and be very happy. We are the RSI Pro traders. For more information about RSI trading, go to www.dayprotrader.com or subscribe to Day Pro Traders YouTube channel. Happy trading to you all.